Hello guys and welcome to Money Journey. Today we'll bring you a quick video of Google stock. We'll do a quick analysis and the main purpose of this video is to show you our process, our research, how do we evaluate, how do we analyze a company, and in the end we can show you what the price should pay for a stock. This is not advice, this is only my opinion and what I think about this stock. So, Google, or should we call Alphabet? I think I'm not the only one always calling Google to this company, but this is what it is, and let's talk about Alphabet. I think everyone knows Google. I'm not going to do in-depth analysis. I think everyone knows it, and it's not the purpose of this video. We can do on another video. Today we'll show you our process on Money Journey. We will show you our process and what we do to analyze a stock. Google is one of my favorite stocks. I love the company. They are awesome, and it's one of my biggest positions on my portfolio. Actually, it's my third biggest holding at the moment, and I would love to buy even more. In the next year, I'm looking to add to my positions, and I hope Google stocks comes down to buy it even cheaper. So, Google. How does Google make money? Google service makes more than 90% of the revenue for the company, as we can see in the last earnings result. They have Google Cloud as well, and it's a bigger part of the company now. It's still not making profits, as you can see there. They are having losses on this department, but I think it's something with a lot of potential. So let's continue. Google. Revenues still going up. They are going up more than 20%, 18%, 12% in 2020. In 2021, they grew a lot. The revenues grew by 41%, and in this year they are growing close to 10%, which is really good. Because this year is being really difficult. You know, everything it's happening, but Google is still making profits. They are still growing, which is very important. So margins, net income margins, 22%, 21, 22. In 2021, they had almost 30% margin, which is incredible, but I don't think it's sustainable. 2021 was a really good year where the margins were really up. And, I don't think that's sustainable. We shouldn't look for that margins. On this year, they are looking for 23% margin, which is still really good. More important things. Shares outstanding. They are buying back shares. The total number of shares are going down, which is good, and they are not buying in mass. They are still just going down half of a percent, 1.7%, 1.4, which is not high. We could be buying more, but Google was not a cheap stock. Neither they are not with a high valuation. So that's okay. I hope with the prices going down, they buy more shares. I'm I'm hoping on that, and I think they will do. This year they are buying more. This is close to maybe 2%. I hope they will continue to increase that number. So, okay, more things about Google. This is our research. Things I like. Let's talk about one important thing. Our checklist. This is attributes that we look on a company when we want to buy one. So Google has all the attributes we are looking. So mode, competitive advantage. They have a wide mode. Everyone knows Google. They are one of the best companies in the world. I'm sure everyone wants to buy Google. Um, I'm not. I'm not gonna talk about their mode, their competitive advantage, because they have no competition. Still, there are fears of ChatGPT. They will overtake Google. I don't believe in it. Um, let's see. I don't know the future, but we'll look at it. So revenue growth. In the last 5 years, they have growing on a CAGR of 23%, which is important. We are looking for companies that are growing. Uh, one one of the most important attributes is high return on invested capital. We are looking always for companies above 15%. Google is growing at they have not growing. They have a high return on invested capital, 24%, which is really good. They have low debt, really low debt. You can see there they have $116 billion in cash. They are long-term debt of only 12 billion, which they can buy their long-term debt in they are producing like 60 billion on cash flows for a year, which they can buy their total long-term debt with a percentage of their 1 year cash flow. More they are free cash flow positive, which is really important on this environment. They are making money for a long time, and they will still continue. They will do that for a long time, I hope. It's Google. It's a company that I want to own for the next 10, 20 years maybe. So we already see that Google is an awesome company, that they have a lot of potential, pricing power. So let's see now if they have a fair valuation. So let's do our discounted cash flow analysis for the next 10 years. So this is my assumptions. We will have 3 cases: a base case, bull case, and a bear case. This is my assumptions. You can agree with that, you can discard, you can think it's too low, you can think it's too high, it's up to you. So for my base case, just let's talk about one thing. I'm doing in my opinion, it's a really cautious assumption. I really believe Google can grow above 10% for the next 10 years. But it's our job to be cautious. We want to have some margin of safety, so if things turn bad, if we can have recessions along the way, you can have a crisis, I don't know. That's a lot of black swans happening. We can see in 2020 we see COVID. On this year 2022 we saw Ukrainian war and a lot of problems, inflation as well. That's a big problem. So a lot can happen, and we should be cautious. So my base case should be around 22% margins.
Google had almost 30% margin on the last year, but I think that's not sustainable. They have around 21, 22 in 2020. They are expecting to have in 2022 around 23% margin. So I think 22% is a good margin for Google. So I'm expecting Google to grow 10% for the next 5 years and 6% after that. PE of 15, it's the median. It's long term, the market PE should be around 15, and Google will be a, a really big company if it grows with this rate. They will double their revenues on 2022, almost 600 billion on revenue if they grow at this rate, which is a really big company. So I'm expecting them to buy their shares at 1% rate a year, and I'm using a 12.5% discount rate. So this is the rate I expect to this is the return I expect from Google. Uh, if I want, that can be high, but I'm not investing in a company if I don't expect a return above 10%. So I can have it on an ETF, on the S&P 500 ETF, for example, on SPY. The median return is around 10%. I don't believe they will have that return the next year, because I really think the market is really overvalued. We can have we have good opportunities in the market. We can still have make money in the next year, but it's gonna be difficult. I don't think if you do our research and invest in good companies at a good price, we can make money. So that's our that's our main goal for the next years, is to beat the market, having higher returns than the S&P 500 and the Nasdaq. And let's see. My best case for Google is that. Our bull case, I'm expecting Google to grow at the next 5 years at 12%, right? 80% for after the fifth year. Uh, if they are growing at this rate, I believe they deserve a 17 PE, and I'm expecting them to buy their shares at 2%. Since we have 25% margin, sorry, I'm forgetting that, and I think they can easily achieve it in the long run as they grow and they 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 make them more the company more profitable. And if I'm expecting this growth rate, this is if you look to probabilities, um, they have higher probability of growing at 10% than 12%. So if we are having a lower probability, I have to expect an higher return. So that's what that's what we call margin of safety. If you are expecting a higher return, I bet I need a higher margin of safety. So I'm putting a 15% discount. For our bear case, if Google only grows at 8% for the next 5 years, 4% after that, I'm using a 13 PE, 10% rate. This is low, but I really think Google can easily do these assumptions. Um, so you have it, and our bear case. 20% margin. This is outrageous. I will I could bet Google do this in really easy. So in my opinion, our base case should be our growth case, our bull case. I mean, I think Google deserves this growth rate, this PE. They have a high return on invested capital, so their PE should be even higher. But I'm doing really cautious assumptions. I'm just doing my opinion. I believe they will grow at a higher rate. But if we are looking to buy a company, we want to buy them at a discount. So if their intrinsic value is $100, I want to buy them at $70, even $50. That would be a really good buy. So this is what we are looking. We are doing a cautious assumptions. So let's see if this is our cases, making our base case a probability of 60%, the other two cases 20%, just being cautious. Um, Google has a lot of cash as well. I have to take that in consideration. Since they have 116 billion in cash, their long-term debt is only almost 13 billion. So their net cash, if we pay all the debt, they have 103 billion in cash still. So dividing that for the number of shares, we have about 8.6.7 dollars per share. So I will add that value to my intrinsic value. So we have 105.5 dollars for the Google stock. So there we have it. So Google makes all the it's all check marks on our checklist. They have a fair valuations. I started buying Google at $100. I increased my positions when Google hit the $84 on the October lows, I think. I'm planning to add it even more. I really love the company. It's my third largest holding in my portfolio, and I hope I can buy it cheaply next year. Maybe around $80, 75. If the market, if the we have problems next year, if inflation uh, is not going down next year, if we have rates coming up, the market will come down even more, and Google will go with it. So I hope I can buy Google even cheaper than I have, and I'm hoping to increase my position. So, what do you think about the stock? Do you think I'm being too cautious, too optimist? Uh, Write it in the comments what you think, and if you think it's a good buy. Um that's my opinion, and I think you make this video, and I think you I hope you find this video helpful, and if you like it, like and subscribe please, and we'll have more videos like this in the future. So bye. And